All right, so you're looking for some hot stock picks with serious potential for 2025 and beyond.
Oh, it's a good place to start.
You've given me some Motley Fool articles claiming that $5,000 invested right could become $100,000 or more.
Well, that's the kind of return everyone wants.
It is. But are these stocks really hidden bargain buys? Let's take a deep dive and see what we can find.
I'm ready to dive in.
They're pointing to ASML and Micron Technology, both in the semiconductor space, which has a history of delivering those sweet market-beating returns.
Yeah. Tech stocks and growth potential, a classic pairing for sure.
So let's start with ASML. They're the only company making these extreme ultraviolet lithography machines.
EUV.
EUV for short. And these aren't your average pieces of equipment. These are the rock stars of chip making, essential for creating the most advanced chips, especially those driving the AI boom.
It's amazing, isn't it? That only maker's status gives them a huge competitive advantage. I mean, if you're a company like NVIDIA and you're pushing the boundaries of AI, you need ASML's machines. There's simply no alternative.
Sounds like a recipe for success. But here's where things get interesting. Their stock is down 5.5% this year. Why would a company so crucial to a booming industry be taking such a hit?
Well, there are a few things happening here. Demand from China has slowed down, and they're a major consumer of chips. And also, bookings have been weaker than expected. Bookings basically mean orders for their machines, and to top it all off, ASML has lowered their own projections for 2025.
So is this a sign of trouble or just a temporary dip? I mean, we're seeing a ton of investment in new chip factories right now. Intel, Micron, TSMC, they're all building new facilities, some with funding from the CHIPS Act. Shouldn't that be a massive win for ASML?
It's a good question, and it shows the interesting timeline of this industry. Yes, these factories are being built, but building them takes years. The payoff for ASML, even with increased demand, isn't immediate. It's a cycle that runs on a different time scale than the chips themselves.
So patience is key. But what about ASML's own projections? Are they still optimistic despite the setbacks?
They are, actually. For 2025, they're still predicting 15% growth in revenue and improvement in their margins. The question is, do those projections take into account the current headwinds and the long lead time on those new factories? It's definitely something to think about.
Okay, so ASML has its complexities, but the potential is there. Now let's move on to Micron Technology. They're a big player in memory chips, a wholly different corner of the semiconductor world.
Absolutely. Micron designs their memory chips, but they also manufacture them. This vertical integration is key. It gives them a really unique position in the industry.
So they're not relying on anyone else to actually make their chips. That must offer a level of control that a company like ASML just doesn't have.
Precisely. That control can be a huge advantage, especially when it comes to managing their supply chain and ensuring quality. However, it also means Micron is exposed more directly to the ups and downs of the chip market, which we all know can be pretty volatile.
Yeah, we've seen that firsthand with Micron, haven't we? Their stock just soared earlier this year on the back of the whole AI boom. But then it cooled off when the next results weren't quite as stellar as everyone expected.
It just goes to show you how market sentiment and expectations can drive stock prices, even for a company with solid fundamentals.
And speaking of fundamentals, Micron still has a very low price-to-earnings ratio, a PE ratio of just 10 for our listeners out there. Could you break down what that means and why it's significant?
Sure. The PE ratio is essentially a measure of how much investors are willing to pay for every dollar of a company's earnings. A low PE ratio can indicate that a stock is undervalued. Think of it as a bargain in the making.
So even though Micron stock has cooled off from its AI-fueled highs, this low PE ratio might mean there's still value to be found.
It's one piece of the puzzle. But you have to remember, to look beyond the PE ratio, how does Micron's PE ratio compare to its competitors? What are the industry averages? Answering those questions will give you a clearer picture.
Context is key. But let's not forget Micron's recent fiscal first quarter results. Their revenue practically doubled to $8.7 billion. Is that a sign that the AI boom is really paying off for them?
It seems to be playing a major role. What's really interesting is this. For the first time ever, data center revenue made up over 50% of Micron's total revenue. That's a big shift, and it shows the potential for continued growth in this area.
And if they're a major customer, NVIDIA, keep seeing this huge demand for AI chips, that could be massive for Micron's future, right?
Oh, absolutely. The success of companies like NVIDIA creates this ripple effect throughout the ecosystem, and Micron is perfectly positioned to ride that wave.
Okay, so we've got two very different companies, both operating in the semiconductor space, but facing their own unique challenges and opportunities. ASML, with their dominance in advanced lithography, is dealing with a slowdown in demand. It's a longer-term game for them. And Micron, with their vertical integration and exposure to the memory chip market, is riding that AI wave, but is subject to volatility. So where do we go from here?
Well, we need to delve deeper. We've only scratched the surface. To really assess their investment potential, we need to analyze their financials more closely, understand their competitive landscapes, and dig into the future prospects.
Let's get into it then. I'm ready to see what other insights we can uncover about these two companies.
Let's take a closer look at ASML's financials. They've trimmed their 2025 guidance, projecting only a 15% growth in revenue. But we need to understand what's driving that projection. A key element is the anticipated growth in demand for EUV machines, fueled by advancements in AI and high-performance computing.
So even with the current slowdown, they're still banking on the long-term potential of these advanced chips.
Exactly. ASML believes that demand for EUV will just continue to rise as chipmakers race to create even more powerful and efficient processors. But there's a potential risk here. They're reliant on a single product.
Interesting. You'd think being the only player in the EUV game would be a guaranteed win. What happens if the technology changes or a competitor pops up?
That's the million-dollar question. ASML is investing a lot in R&D to stay ahead of the curve. But it's a risk, for sure. Investors should be mindful of it. It's like putting all your eggs in one very expensive basket.
It makes you think about diversification, doesn't it? Don't put all your chips, no pun intended, on one company, no matter how dominant they seem.
Absolutely. Spreading your investments across different companies and sectors can definitely help mitigate risk. Now let's look at Micron's financials. Their recent performance with revenue doubling paints a pretty picture, but we need to look beyond the headlines.
That's where things get interesting, right? Even though they're riding high on the AI wave, Micron is still operating in a very cyclical industry. How do we reconcile those two things?
That's the challenge with Micron. Their vertical integration gives them control, but it also exposes them to fluctuations in demand. When the memory chip market is hot, they make a lot of money. But when things cool down, the impact can be significant.
So investors need to be ready for a bit of a roller coaster with Micron.
Most likely. Their recent success was driven by data center demand, which is encouraging. But it's important to remember that technology changes quickly. What's hot today may not be tomorrow.
And that brings us back to Micron's surprisingly low PE ratio. We said it could be a sign that the stock is undervalued. But could it also reflect the market's uncertainty about Micron's ability to maintain this level of growth?
That's a good point. The PE ratio is helpful, but it's only one piece of the puzzle. Investors need to consider other things too, like their debt levels, their investment in future technologies, and their ability to compete with other memory chip manufacturers.
It's about digging deeper, right? Looking past the surface numbers. We need to understand the company's strategy, their strengths and weaknesses, and how they plan to adapt to the changing tech world.
Exactly. And we can't forget the bigger picture, the geopolitical context. We talked about U.S.-China tensions briefly, but it's important to emphasize how much those dynamics can impact both ASML and Micron.
I was just thinking about that. They operate in a global market where political decisions can really affect their business. How do we even factor that in to our investment choices?
It's not easy, and there's no way to predict the future. Staying informed about global events is key, though. You need to understand trade policies and assess the risks associated with these geopolitical tensions. This is crucial for any investor, especially in the semiconductor industry.
It adds another layer of complexity to an already complex situation, but it's a necessary one if we want to make smart decisions. I think what we're seeing here is both ASML and Micron have a lot of potential for growth, but there are also inherent risks that investors need to know about.
You got it. There are no guarantees in the stock market. It's about weighing the potential rewards against the potential risks. You need to understand the companies, the industry, and the global landscape, and then make smart choices based on your own goals and risk tolerance.
And maybe just accept that there will always be some uncertainty, no matter how much research you do.
That's the nature of the game. But by staying informed, being adaptable, and focusing on the long term, we can navigate that uncertainty and make good decisions that help us reach our financial goals.
So where do we go from here? We've talked about financials, geopolitical risks, and the cyclical nature of the industry. What are the main takeaways for our listeners who are trying to understand all of this?
First, remember this. Past performance doesn't guarantee future results. ASML and Micron have grown a lot, but the semiconductor industry changes all the time. What worked in the past might not work in the future.
So don't get caught up in the hype. And don't just chase those past returns. Look at what's happening right now and what might happen in the future. Consider the broader context.
Right. And second, diversification is so important. Don't put all your eggs in one basket, no matter how good it looks. Spread out your investments across different companies and sectors and asset classes to manage your risk.
Like a diversified portfolio. Don't just focus on the exciting stuff,
Right.
but create a mix that can handle different market conditions.
Exactly. And third, investing is a long game. Don't panic over small changes or the latest headlines. Focus on the real value of the companies you invest in and their potential to grow sustainably.
Patience and a long-term outlook. Those seem to be coming up a lot today.
Those are key for any investor, especially when it comes to tech stocks.
And one last thing. Don't be afraid to ask questions. Do your own research. And look for different points of view. The more you learn, the better prepared you'll be to make those decisions.
Absolutely. Knowledge is power. And in investing, it can make the difference between winning and losing.
So for our listeners who want to learn more about ASML and Micron, what resources are out there?
There's a ton of info online and off. Start with company websites, financial reports, and analyst ratings. Publications like The Motley Fool can give you some insights, though they're just one perspective.
And of course, there are more detailed resources if you want to really dig in. Industry journals, academic research, even books on specific companies and sectors can provide a deeper understanding.
Don't forget about networking. Talking to other investors, going to industry events, and meeting with experts can give you valuable insights that you won't find anywhere else.
Like building your own knowledge network. The more you connect, the more you learn.
Exactly. And the more you learn, the better you'll be at navigating the market and making good choices that help you reach your financial goals.
So we've covered a lot. We looked at the financials and future prospects of ASML and Micron. We talked about industry dynamics and the influence of geopolitics. So what's next? I think the big takeaway is this. Investing, especially in semiconductors, it's not just something you do on the side. You gotta stay engaged. Be curious. Always be learning.
It's all about continuous learning, right? The more you know, the better your decisions will be. You'll have more confidence, knowing you're making choices that match your goals and how much risk you're comfortable with.
And that brings us back to the question we had at the beginning. Are ASML and Micron really bargain buys? Can they turn $5,000 into $100,000 or more, like the Motley Fool suggests? What do you think?
Well, there's no magic answer, no guarantees when it comes to investing. They both have good things going for them, but they also have challenges. And the global landscape is always changing. Whether they're a good fit for you depends on your own situation, your appetite for risk, and your investment timeline.
I think we've given our listeners the information they need to make that decision themselves. They understand compounding, but they also know they need to do their research, diversify, and think long-term.
And they've learned more about the semiconductor industry. Its potential is huge, but it can be volatile, and it depends on so many things happening around the world.
This has been a great deep dive. I learned a lot, too. The financial world is so complex.
It is. It reminds you that there's always something new to learn.
To all our listeners out there, keep asking those questions, keep learning, and keep exploring the markets. It's a journey to becoming a savvy investor.
And remember, investing isn't just about the numbers and graphs. It's about the people, the ideas, and the big picture that are shaping the future.
Well said. Until next time, everyone, stay curious, stay informed,
and
happy investing.